Hey gang, it's Simon here with your Tau Daily video for Wednesday the 1st of May 2024. So markets had a proper sell-off on Tuesday. There was really nowhere to hide, well, nowhere except Eli Lilly, which had a good rise after results. But all the major sectors were down and most of the stocks were down. Bonds were weaker too, all right? There was really kind of nowhere to hide. Gold was down, copper was down, everything that kind of has been up was down. So what happened? Well, we had the employment cost index came out, and that has re-accelerated, all right? We're up at 1.2% rise for the quarter. Now, inflation starts with rising prices, but it becomes entrenched when wages start rising. You can enter the dreaded wage price spiral. And that's kind of what gave the market the jitters yesterday. Not only is the employment cost index rising, but Chicago PMI printed at 38. Now remember, on a diffusion index, anything below 50 signals contraction. The market was expecting a print of 45. Now, don't get me wrong, 45 isn't great, but 38 was a bit of a shocker. So you got re-accelerating and sticky inflation combined with declining economic activity, gets people starting to think about stagflation. All of this is meeting with some disappointment from the market, who at the start of the year was pricing 7 rate cuts. For the first time this year, we've now got a probability, a very small probability, but a probability nonetheless of a rate hike. That's a 1% probability factored in for today. If we go out to June, you can forget about a rate cut. But again, for the first time, the idea of a rate hike, first time all year, is being entertained. If we go out to July, again, forget about a rate cut. Forget about a rate hike either. But it's the first time we've seen any pricing at all for hikes. Basically, you've got to go all the way out to December before the market gets more convinced that the idea of a rate cut is a higher probability. So this is starting to meet with some disappointment. Now, yesterday I made the case for why I thought the triple Qs were due to roll over. I thought that this was all they had, and the likely course of action was a rollover. So check out yesterday's video if you missed it. As far as I'm concerned, markets showed their hand yesterday. I think these lows are likely to get taken out, the recent swing lows in S&P and NASDAQ. And so long as this trend continues, we're in sell mode. So really looking for short trades rather than long trades. Now, I wouldn't be piling on the shorts today ahead of QRA and Fed. There's the slim possibility that they say something that sends markets into a bullish frenzy once again. I think the chance is slim, but obviously the chance exists. So I don't like adding a lot of new positioning against binary risk events like FOMC, and QRA has become one as well. But assuming this high doesn't get taken out, I think we continue to be in a downtrend in a sell fear. I hope it helps, and I'll catch you tomorrow.